Hello guys, there are certain price scenario where some trading strategy failed. When using the moving average is best suitable for a trending market. Remember, we always said the trend is your friend, which means that when market is trending, market is moving in a particular direction, either in a buy trade or in an uptrend. So the moving average is very much suitable when trading a downtrend and an uptrend. But there is a scenario where the moving average cannot work. There are market conditions where it becomes difficult to apply even the smart money trading method. And that difficult market situation is the ranging market. If you look at what has been happening here, you realize that for a period of time, all of this movement has been a ranging market. So you can see that price has been ranging, and in this scenario, moving average cannot work. In this scenario, it becomes difficult to apply the smart money trading method. So the question is, what type of trading techniques is now suitable in this type of price scenario? So when you come across this type of price scenario, you are left with two options. One, it is either you stay out, because in this consolidation phase of the market is where market is trying to do what? To accumulate liquidity. This is where market is trying to bring in order. It is from this phase of market that manipulations begins. And if you don't know what you are doing, you will eventually end up losing your money to the market. So one of the options available to you is that you stay out of the market. And if another options available is for you to go to your lower time frame, because when you are seeing a ranging on this higher time frame, there is a high tendency that price is moving on a lower time frame. So let's look at this lower time frame. For instance, this is our 15-minute time frame. So if you look at our 15-minute time frame and you observe from this zone, you realize that price is moving in a particular way, which is in an uptrend scenario. And if you look at this critically, you realize what price is doing. And this zone, what we are seeing here now, is a typical, you can see that this is an imbalance, right? In this uptrend scenario, and price came to fill into this imbalance and then continue pushing to the upside. Another advantage in this scenario is for you to begin to look for a chart pattern still on your lower time frame. For instance, looking at this scenario, this is a chart pattern that can help you to scale through the price situation. So you can see how price break out of this zone, and you can see how you could have made your entry in that particular price situation. Alright, having said that, what else can you do? Remember, chart patterns are price action. So in this scenario, you can resolve into your what? Into your chart or your price action pattern, which is the trading of support and resistance. So you will still have to move. Let's move to 1 hour time frame. Now if you look at this 1 hour time frame, we may say we have some reasonable price movement in terms of price action. So in this ranging for days, we can easily establish that we have what? We have this support, see this resistance zone. So you can see simple way that you can profit trading a ranging market. So you can see that price came, retest this zone, sells to the downside. And again, price pull back to this zone, sell to the downside. So when it comes, you can look at this carefully. It touched this point, return to the upside. So these are things you can see now. It retest here and went back. These are simple techniques. You can see that in this case again, it's returning to this zone and it is now pulling to the downside. So these are simple principles, simple techniques of how you can profit from what? From a ranging market until you get a defined price direction. It is very simple and it is very easy. And I believe you know that in your price action you need to get confirmation. You can use this bearish engulfing candle as your sell entry confirmation. Here we have what? We have an evening star as your buy entry confirmation. Or you wait for a bullish confirmation before you go into your trade. And again here you can see all of this weak rejection of that hammer, and that can become what? Your entry confirmation. And obviously you can see here that we have an engulfing candle confirmation. So these are simple patterns that you can apply, and I believe you have learned something new. Please do not forget to like, to share, subscribe, turn on your notification bell so you will be the first to get notified when we upload our next video. Thank you and see you in the subsequent video.